From the floor of the CME Group, this is Danny Riley with this morning's mid-morning update. You know what we're going to call this video? We're not even going to call it anything. We're just going to say we're picking up right where we left off. The high of the day in the S&P came in at 1925.30 early morning. The low came in at 1915.5 recently. And last, we're 1921.20. We're up 2.7 handles. Total volume, 925,000 minis trade and 1,000 big S&Ps trade in the pit. Now, my question to you guys, and I really appreciate it, let's talk a little bit on the YouTube channel again. Where's all this weakness coming from? We know it's coming from selling the good earnings and selling the good economic report. We know all that. We know some of the weakness is from some of these global domestic problems. But you know what? At the end of the day, where is all this weakness coming? Well, if you looked at the DAX lately, the DAX has been getting, if you want to talk about volatility, that's where its volatility is going. The DAX opened this morning, it opened 14 higher, and then it rallied another 51 points, and then it sold off 120 points, and then it rallied 100 points. Now that's volatility. Now, what we've seen over the last couple of weeks out of the DAX is that it's sold off 9.5% from its high. It's sold off a total of 920 points. 600 of that came from last week. Now, as far as what the S&P is looking at, and I really do think that the DAX, and I think you guys in Europe will agree with this, London and Germany and all throughout Europe, is that the DAX is the closest thing to the S&P. And sometimes it actually goes before the S&P, but I got to go back to one thing. The S&P is the #1 market leader, everybody. So while the DAX may be an indicator of things to come, and it has been over the last couple of weeks, it still all funnels into the big funnel, and that's the S&P 500 right behind me. But anyways, at the end of the day, the S&P sold off a little bit this morning. We just sold off down to 1915, and then we just rallied back to 1922.25. And it seems like the S&P is trying to hold. But the other part about this is that this is the week before the expiration, and we are going to be looking for the pit bulls Thursday, Friday low. I can't rule out another plunge here, but you know what? I think the longer that it takes for the S&P to really take out these lows, the more likely it is that the S&P will start to short cover. That said, we'll leave it like that, and we'll see you on the closing print.